Welcome to our first virtual Internships Showcase. Whether you're joining us for the day or just this segment, we've got an exciting time ahead where you'll see firsthand the talents our students bring to organizations that engage them. In this segment, we'll see presentations from students who interned at Manulife, OPTrust, Scotiabank, Ontario Teachers Pension Plan, and CPP Investment Board. First up is Chenglan Huang, who worked as a quantitative analyst on the derivative and asset modeling team at Manulife. I'm delighted to share with you that Chenglan performed so well in that role, she received a return offer for August 2021. Please join me in congratulating Chenglan and welcoming her to the stage for our first presentation.
Good morning, everyone. Do I start right now? Thanks. Good morning, everyone. My name is Chenglan, and today I would like to share with you my internship experience at Manulife during this winter semester. So in the next few minutes, I will briefly introduce the teams that I worked for, our responsibilities, and some of my personal highlights as a quantitative analyst intern. So I will start with the team structure. Derivative and asset modeling is a subgroup under model and analytics. And our team is primarily responsible for providing quantitative support to hedging and investment activities under two wealth accounts, one for the company itself and one for our clients. These responsibilities include derivative modeling, valuation curve construction, and asset model development. Also, with the label replacement taking place at the time being, label transition has become a focus since many of our valuations were based on label discounting and projection, and therefore required rebuilding. And during my term, I had the chance to get involved in this project in addition to the routines. Moving from the team to myself, I would like to show you what my role was like through a few of projects that I found to be the most interesting, challenging, and rewarding. First, I developed the curve methodology and created curve configurations in our modeling system for 11 indices to facilitate the label transition. And specifically, I configured the settings to ensure that they were fit for the corresponding pricing models. And these settings includes the conventions, the instrument type at each grid point, and the calculation or bootstrapping formula for the effective output. And secondly, I updated our existing resources, either in accordance with Bloomberg or research on the market standard practice. These revisions were in terms of the market conventions and the liquidity, to ensure that the models were taking in the most suitable data as inputs. So task 1 and 2 together constitutes the input for a valuation curve, namely the curve definition and the curve itself, and the data. And the curve itself is then an input for the valuation models. And finally, I implemented the Heston model calibration, which is used for volatility swap pricing through the derivation of analytical formula and parameter calibration and exploration of better integration techniques. So these tasks gave me exposure to the complete model construction process and a better view of the team's role within the organization. So that is my internship experience in a nutshell. Thank you for listening, and I welcome any questions.
Thank you, Chenglan. And before we open the floor for questions, I would like to include a quote from her supervisor, Wei Chao, who said that Chenglan both met and exceeded our expectations. She is hardworking, detailed oriented, and able to work independently. Her collaborative style and great personality made her a valuable addition to any team. In fact, we've offered her a contract following graduation so she can take on greater responsibility in the role and continue to explore this career path. So that was from her supervisor, Wei Chao. If there's any questions from the audience, I would like for you to raise the hand in your buttons in the reactions tab, in which case you turn on your camera and unmute your mic, and we'll bring you on stage to ask your question. You can also type your question into the chat, and Michael or someone will read it for us. Are there any questions from the audience, from anybody? No questions. Yes. So if there, I have a question from me, which is, did your internship align with your expectations, or were there anything you found different?
I would say it's kind of different from what I imagined, because I thought 4 months would be quite compact, and I thought I would have started like working right away. But instead, I was given a fair amount of time to do the training and replications, and to figure out the reasons behind every approach or step. So I guess that was pretty valuable, and I think that really took my experience to the next level. And besides that, I would say there also something else that was unexpected. Like I had the exposure to the market side and had hands-on experience with Bloomberg. That was something unexpected, and but still, it's a brand new field, and I find it really interesting.
Very good. Thank you. Yeah, so Vicky has a question. You want to go ahead and ask?
Yes. Can you hear me?
Yes.
Yes, I just want to ask Chenglan Huang, have you faced any challenges during this internship, and how do you overcome them?
Sure. I think the challenges come mainly from the gap between, I would say, the gap between school and work, and I had to find a way to bridge that gap. So even though I have seen many of the models or mathematics at school, even maybe in MMF or even in my undergrad, but still many applications in real life can be much more complicated, and that I would say would be the biggest challenge. But luckily, my team was very supportive, and they had guided me through the replication tests and the demos. So it went pretty smooth. And also, there's actually a lot of learning materials available from different resources that I could leverage. So yes, that's my biggest challenge. Thank you.
That's great. Thank you again. And now our next presenter is Chloe, who acted as an investment analyst on the portfolio construction team at OPTrust. Please welcome Chloe Wei.
Can you guys see my screen? No? Sorry. Oh, yeah. Sure. Hi, everyone. My name is Chloe, and today I want to share with you guys a project I researched during my internship at OPTrust, which is portfolio choice with path-dependent scenarios. So first, let's recall how do we select portfolios traditionally. Many investors select portfolios by using the technique of scenario analysis, which involves defining like each scenario as a set of values for relevant economic variables, assigning probabilities to prospective scenarios, and also and then translating economic scenarios into expected asset class returns and computing and evaluating portfolio performance metrics. And however, this new approach of portfolio choice with path-dependent scenario is somehow quite different. It defines scenario not as average values, but as paths of the economic variables, and then measure the likelihood of this path on the basis of the statistical similarity of the path to historical sequences by calculating their Mahalanobis distance and use partial sample regression to map economic outcomes onto each asset class return. This process allows investors to evaluate portfolios on the basis of the likelihood that the scenario will produce a certain pattern of returns over a specified investment horizons. To illustrate this methodology further, I did a case study with 6 prospective economic scenarios, which include 2 macroeconomic variables, which are real GDP growth and inflation. Theoretically and empirically, these 2 variables are the key drivers of future market behavior. The choice of just 2 variables is parsimonious, and these variables are orthogonal in the sense that they capture 2 distinct macroeconomic dimensions. And there are 2 aspects need to point out here. So first, the 6 scenarios were constructed following the beginning of the COVID-19 pandemic, but they are by no means unique to current conditions. They could just as well represent alternative recovery paths following any economic or financial shock. Second, these scenarios are meant to be illustrative, so which means we can construct our own scenarios based on our own views or the opinions of experts in the future. And then to estimate the likelihood of each prospective scenarios effectively, we are asking like, given the recent economic experience, how likely would it be for one scenario to prevail going forward versus other alternative scenarios? And I did calculation of Mahalanobis distance and partial sample regression to get the probabilities and different metrics. From the table here, it shows that from period 2020 to 2022 is most likely a U-shaped scenario, which has probability of 32.7%. And after considering stock, bond, and cash, those 3 asset classes, I consider 3 alternative portfolios, which are conservative, moderate, and aggressive, which have different weights on different asset classes. From this table, it shows cumulative returns, maximum drawdown within horizon loss, worst loss, and number of negative years of different metrics for each portfolio under 6 different scenarios. And the right 2 columns show the probability weighted average and worst case of each evaluation matrix. Moreover, from this table, we can say that the aggressive portfolio will have the highest return, which is 17.5%, 3-year cumulative return. But meanwhile, it has very high downside risk. As you can see, the absolute value of its maximum drawdown within horizon loss and worst loss are very large. And within these 3 alternative portfolios,
we can see the most favorable one is the moderate one, which has 15.3% 3-year cumulative return, and meanwhile, its downside risk is quite low compared to other portfolios. So I believe this model will be very helpful for our in the investment management industry, and to help manager and investor to do their own portfolio choice and make relevant investment decisions.
And this is what Matthew Chow, Senior Portfolio Manager, Portfolio Construction at OPTrust, had to say about Chloe. The University of Toronto's Masters in Mathematical Finance internship program has been a wonderful partner for OPTrust. Recently, we had the pleasure of working with Chloe Wei, whose collaborative working style and strong coding skills made her a great addition to the team during her term at OPTrust. The program has been a resource for talent like Chloe, and multiple program alumni continue to be valued members of our team. We look forward to continuing on this partnership in the years to come. Congratulations, Chloe.
If there are any questions from the audience, please use the raise hand button in the reactions tab of Zoom. Then turn your camera on and unmute your mic. We'll bring you on stage to ask your question. You can also type the question on the chat. Are there any questions? Okay, so maybe then I ask you a question. Chloe, do you see any challenges for implementing this model in the future?
Yes, absolutely. There are like few challenges I can say in this model. So the first one is for these economic scenarios, if it's hard for us to define each possible scenarios. So we need to have some experts in the relevant areas to help us to define the possible scenarios in the future. And the second challenges I say is that, so for this case study, I only use 3 asset classes, which are stocks, bond, and cash, which are very popular asset class in the asset management industry. But what if we want to have other alternative assets included in our portfolios, like REITs, private equity? Those asset class have lack of data sources available for us to do the regression and to do the test training modeling. So maybe this is a challenge we will face in the future. Thank you.
Okay, thank you. Now we move to our next presenter, Elsa Chen, who was focused on pension strategy and enterprise risk at the Ontario Teachers Pension Plan. Join me in welcoming Elsa Chen. Elsa?
Hi, everyone. Thanks for coming today. I'm going to introduce my previous work experience during this presentation. And I hope this could give you an idea that what is my team responsible for and what I was working on during the past 4 months. I was working as an investment analyst in pension strategy and the enterprise risk team at Ontario Teachers Pension Plan. And our team is a specialized team of professionals whose main role is to continually enhance the asset liability modeling capability and also provide the research and ongoing monitoring from a risk management perspective. All our team members of the pension strategy have a background in both actuarial science and institutional investments. I was reporting to John Olsen, who is a principal in pension strategy team, and I also have the opportunities to work with members in strategy and the risk team on multiple projects. So in pension strategy team, our members' core responsibility are as follows. Firstly, we are responsible for the asset liability modeling enhancement, and where we are continuously seeking the opportunities to upgrade our model. And secondly, we support the asset model tool and its interaction with the asset liability model. And also, we may have some special research project where we have the chance to upgrade our knowledge, enhance our modeling algorithm, streamline our working procedures, and keep pace with the times. Also, and we also need to collaborate with IT department. Our asset liability model is built in our own software, and we are trying to continuously perfect the function of it. So IT team is helping us to redesign our own modeling software. And we also need to prepare the monitoring reports for the stakeholders across the organizations. So finally, I will briefly describe a research project that I was working on during the last semester. Before that, let me give you some background. So our general working procedure is that we receive the teachers' contributions every month, and we invest this amount of money into assets. In return, teacher could choose to receive their pension after their retirement, or they could get a one-time lump sum amount from us. So the pension commuted value is the estimated cost in today's dollar of the total amount of money that OTPP needs to fulfill its pension obligations if it is paid in a lump sum amount. Since the standard of calculating the commuted value has been changed, in order to better reflect the real market, our new CV interest rate are required to relate to this 4 credit spreads. There are provincial midterm, provincial long-term, corporate midterm, and corporate long-term credit spreads. And it is desirable to come up with a model to forecast these 4 credit spreads in the future projections. So after investigations, I create VARX models to simulate the future credit spreads. So VARX stands for vector autoregressions with additional exogenous time series components. So the VARX is it's a stochastic model of interest in scenario where we desire to capture the relationship between multiple quantities as they change over time and forecast the dynamic behavior of the vector of time series. And this model has been embedded into our system, into our software, and has passed all the testing. And our VARX model will be used in productions in the future. And that's all my sharing. Thank you.
Thank you, Elsa. I will ask John Olsen, Elsa supervisor at the Ontario Teachers Pension Plan, for his comments before we start the Q&A. John?
Guys, just very quickly wanted to thank Elsa for the time she spent with us. She was a really valuable member of our team for the internship that she had, and definitely has a bright future ahead of her. And we worked on a lot of different projects with our team and with some other groups, as Elsa described. And so I definitely had a very good experience, and looking forward to staying in touch and seeing where Elsa goes from here. So thanks a lot.
So thank you very much, John. Thank you, Elsa. If you have a question, please use the raise hand button in the reactions tab. Turn on your camera and unmute your mic. We'll bring you on stage to ask your question. You can also type your question into the chat and we'll read it for you.
Can I ask my question now?
Go ahead. Yes, thank you.
Hi, Elsa. You said that many people in your group have the actual science background, and I want to know if the actual science background is necessary for all interns.
You mean in my team? Is that necessary?
Yes.
I think if you have an actual science background, it will be an advantage, but it's not necessary.
I see. Thank you.
That's great. So thank you, Elsa. And we move on to our next presenter, Yuran Bo, who worked as a senior analyst, public credit at CPP Investments. Please join me in welcoming Yuran Bo.
Hi, everyone. My name is Yuran. I was an intern at the Balancing Credit Investment team at CPP Investments. The objective of my team is to analyze the composition of bonds from the perspective of sector, currency, time to maturity, etc. with the benchmark. On top of that, we would like to generate extra alpha while keeping the risk exposure within the approved risk limits. Most of my projects require a mix of finance and technology. Today, I will present to you one of them, the Bond Stockmaster project. The related Bond Stockmaster table is one of the most important tables in our credit database. The problem with the current table is that its update procedure is entirely manual, so it requires users to identify which bond essence they would like to update. Some bonds are categorized in a sector that is contrary to common sense. For example, Alphabet is categorized as communication services instead of information technology as many people expect. Besides, the ticker and sector of a company may change from time to time because of merger and acquisition. As a result, I created a live update version of this process. However, it introduced another problem with 001. 001 captures the price trend for 1 basis point shift in the credit spread. Traders care about 001 per sector because different sectors are managed under different traders' names. There is a huge 001 discrepancy per sector between the current and proposed table. As you can see in the table on the bottom left, it goes up to $30,000 for IT sector. A brutal replacement for the table would lead to huge difficulties for the trader to manage their respective risk exposures. I approached this issue by implementing manual adjustment on top of the automatic update. This is highly interactive and customized web page is used to let traders decide whether or not to adopt our proposed bond information. It has all CSS functions such as creating filter field, conditional formatting, checkbox, and drop-down, and even pop-up window. This would allow for a more smoother transformation to the proposed table without a significant risk exposure impact on the trader level. So through this experience, I found that not only the purpose of the application is the essence, but finding the best way to present the data in a user-friendly way is equally important. So this is the end of my presentation. Lastly, I want to thank my manager and mentor for making this winter a great experience.
Thank you. Thank you, Yuran. Yuran's supervisor at CPP Investments board was Dustin Fader, and this is what he had to say. Yuran is very good at both working independently and pitching new ideas to the team. She's strong at problem solving, being able to work through issues on her own and find solutions. She has performed well on every task she's been given, and every team she's worked with is very happy with her efforts. She's also great at asking follow-up questions that show her understanding of the topic at hand. So that's very good. Congratulations, Yuran. Are there any questions from the audience? If you have a question, please use the raise hand button in the reactions tab, turn on your camera, and unmute your mic. We'll bring you on stage to ask the question. So we have a question.
Hi, everyone.
Yes, go ahead.
Hello, everyone. My name is Luja Yang, and I'm an incoming new student for MMF in this quarter. And as you mentioned in your presentation, that the application of the real world is really important. So I'm just very curious about how do you transfer what you learned from the course in the MMF program into the real world practice? Do you have any the tips or any suggestions, the recommendations for the new students?
I think one most important thing is that we have many tech courses in MMF from MATLAB, Python. This are really important because the app I built is totally based on the Python language. But you have to apply what you learn in school to the there of course is some discrepancies. Like the package I used for the user interface one is completely new. So it's important that you can apply the things you learned from other packages to these new packages. But as for other aspects like data manipulation, data cleanness, they're the same. So I believe that the MF courses would be really helpful.
Thank you. Thank you so much.
So this wraps up our first segment. Thank you for joining us today. Feel free to stay for the next segment or join us later this afternoon. We'll take a short break now and resume with segment 2 at 10:45 a.m. Toronto time.